Good morning, ladies and gentlemen. It's time for a 4-hour sweep. It's Tuesday. I actually meant to do this yesterday, but didn't get to it. We're too busy making money yesterday. Had a good trading day yesterday. Just busy. So, we're going to do this on Tuesday this week. We're going to do our normal market analysis, our macro analysis, see what's going on, see what we're looking for this week. We have FOMC on Wednesday. I think that's the elephant in the room. Likely volatility, obviously. So we'll see how that affects everything, especially the dollar and the equities. So first, let's start with Buckhorn. Our standard Buckhorn analysis beginning here. Boy, we got that right last week. I don't know if anybody caught that from last week. Just made sense. But now, not looking too good. And of course, this is highly correlated with the equities market, the U.S. equities market, because the demographic of the Bitcoin trader has changed. It's Wall Street bets running Bitcoin now and not the weekend warriors. So, what now? We've sold off and broken the low. So this is a thing. Really should have taken this yesterday. We're looking at this yesterday. Should have taken it long. I just didn't bother with it. It's not really a good place to mess with it. Could have possibly taken it off the broken low. We're back into that weekly zone. There's a big weekly demand level down here from the past. That being said, this is not really looking too hot here. We got some targets on the way up. Not looking too good here. It's not looking good fundamentally. It's not looking good technically. There's a lot of regulation inbound. There's some other things going on with Bitcoin right now that aren't getting a lot of attention. There's a critical bug in Bitcoin. Maybe I'll do it. Maybe I'll take a look at this from a programmer's perspective, but not right now. There's a critical bug apparently in Bitcoin that's a runaway inflation bug that allows it to go above 21 million coins. And it's rumored that this has been exploited multiple times as far back as 2010. So Bitcoin's got some issues right now. You're probably going to be seeing a lot more about that in the news. It's starting to resurface again because there's some high profile people talking about it. So that may be a thing, but this could be fudding on the low. That tends to happen with Bitcoin. What you don't want to do is start selling this now, really, to be honest. That being said, I would rather be long from lower. So we're kind of figure out what's going on. We're in between a swing high and a swing low. The trade was last week, really. Shorting the money. Shorting where your invisible liquidity is. It's the money that you do not see that you need to be aware of. It's the money that's not on the chart, not in candle form. It's where the money is supposed to be, not where it has already been. So right now, probably not a good idea to mess with this. Realistically, we're in between a swing high and a swing low and kind of want to stay out of the middle. We'll mess with this later. It's just not the best thing. As far as the day trade is concerned, I would wait and see how this candle closes. It looks like there's probably going to be some more downside. If gun to my head, I'm going short right now. However, it's not a good long. It's not a good long or a short, really. We're kind of in the middle of a range consolidation that's probably forming here, and we don't know if it's going to expand or what's going on with that. It's just not really a great trade right now. But the short was last week when we talked about it, and now that it's broken the low, that was the perfect place for shorts to close, right? If you need liquidity to close your short, you need a whole bunch of people that are panicked and willing to sell at a lower price so you can buy it back from them. So once this broke the low, everybody's, oh my God, it's going to die. Everybody always does that. Everybody sells below this level and everybody starts selling it when it breaks a low. You're just getting faded when you do that kind of stuff. Don't do that. And we're not going to spend time on that. Just don't do it. Next, dollar. Interesting here. This is what we were talking about earlier and yesterday. I think we're on our 4th or 5th day in this range. Pretty weird. Yeah, we're just distributing on a high. And this is very, very high on the US dollar, the dollar index. You got to zoom out to really understand this. Again, we've had multiple rate hikes, including one coming this week. Tomorrow, FOMC is supposed to be another 75 basis point rate hike inbound. We talk about this a lot in the group. I hate it when something is fundamentally bullish on a high or fundamentally bearish on a low. This is how people get hurt, when the fundamentals and the technicals are saying two different things. Technically, this is extremely high and toxic and dangerous. Fundamentally, we have a rate hike coming tomorrow. So very interesting situation here. We've been distributing on the high up here, still a lower high. I would just be very cautious with this. We're watching for this to come up a little bit and then probably short it. I think it would be interesting if on FOMC we get some weird pump tomorrow and then a just complete wreckage, sell the news event. All the noobs start buying the rate hike when it's clearly been priced into the market already and forecast very clearly. I don't know. This is the kind of area and the kind of stuff going on where people get hurt and lose a lot of money. So we want to be very careful with anything against the dollar this week. That being said, probably going to be some very good trading on it. Right now, I'm assuming we're going to step back up a little bit to the top of this range. I mean, it's moving back up to the top of the range. Buyers on the bottom, sellers on the top. Very simple. Range consolidation. So I'm assuming we're just going to step on up. Now, the thing is, caveat here, whenever you get a big bullish candle, there tends to be a pullback on the next candle or the next one or two candles. You get a one or two candle pullback, and we always watch center mass of the body of the candle, algorithmic target. We don't need to go into detail on that. We do that in a group. But I'm assuming I'm going to have the bias, the directional bias, that we're going to move up a little bit in the dollar before FOMC tomorrow. And I think it's going to be very interesting where price is when FOMC hits. Are we going to be up here at the top of a range in supply on a lower high, on a macro dum-dum high? Everything says short here. Everything technically says short coming. We have a 75 basis point rate hike inbound tomorrow. So this is going to be really interesting. Right now, assuming we're going to push higher, and we'll make a decision on things like Aussie dollar, Euro dollar, pound dollar. When it gets up here, dollar CAD potentially short. We'll see what price action looks like. If there's any evidence of a reversal, your better risk reward is going to be to short the dollar, but from a little bit higher. And we'll see if it tries to spike and pull some range expansion or something. Sometimes that'll happen where you'll have a range and it'll expand like that. That kind of thing. On a high and a low especially, but we still haven't broken the high. So just be aware of that. Interesting situation on the dollar. We're moving into an area where we're going to be technically bearish as far as our bias is concerned. We'll be looking for a reversal to the downside, and it'll be fundamentally bullish. So who knows who's going to win that battle tomorrow. Moving on, related to that, Aussie dollar. We've been watching this range expansion for a couple months. Same situation here, we don't do trend lines here. Friends don't let friends do trend lines. But to illustrate what's happening here, that's why we circle our highs and lows and are looking at our equilibrium of the move. You can see the range has expanded, and we're just back. We're just hugging the bottom on the bullish dollar. The dollar's been so bullish that it hasn't run its iteration back up yet, and that's going to be happening. Got to zoom out a little bit to figure this out. See this? That will happen. Now the question is it how much farther is this going to retest the low a little bit more first? Is it going to make a new low? I don't know, man, what's going on with that, but there's going to be a really, really epic trade coming on Aussie dollar to go back up in the range expansion. So that's going to be a thing. We're looking to break this swing high. We still haven't tested it yet. And then that'll be a change in the direction, really. So at the moment, we're going to be watching this and again, these are 4-hour candles, but we're going to be watching the dollar this week. Obviously tomorrow, just kind of got an equal low. Any break of the low on this, if the dollar pumps or something, we're definitely going to be interested in getting long on this. We've tried it a couple times, keep catching it, and it just hasn't made the big move yet. But you're looking at hundreds of pips here. You're looking at like 1,000 pips to go back up to retest the previous high in the range expansion. Again, you got to zoom out to kind of see it, but very interesting price structure here that's going on. Price action ish, but more structural thing going on. You got a clear range expansion, and we're back on the bottom of it. So we're going to be looking to get long on this, just not necessarily today. We're just looking at just some zoomed out macro structure right now. What's likely happening this week? And as far as short term, 4-hour candles wise, it's 5 a.m. now. We've got our 5 a.m. to 9 a.m. candle just started. We have our 9 a.m. to 1 p.m. candle, and then our 1 p.m. to 5 p.m. candle. So we've got 2 more candles left. And our job at this point of the morning is to try to identify a directional bias and predict what the next 2 candles are going to look like on the 4-hour chart. What are these next 2 candles likely to look like? And that can help us get a directional bias. We obviously want to see if this is going to break the low or not. And if this does not break the low on this candle, our 9 a.m. candle open, we're probably going to be looking to go long here to get back to the top of the range. It's just ranging right now. We've got this kind of situation going. And if this candle either sells off and gives us a good low entry, or if it doesn't break the low and it just kind of stalls here, we're going to be looking to take the green candle back up. So we'll figure that out. We'll see what's going to happen with the dollar. We don't really have an answer yet, but we've just come down a little bit. Pretty tight range overall. There's probably going to be a green candle coming on this, and it'll be the dollar selling off. So we'll see. We're going to watch the dollar to get to its range high that we were just talking about, and we may take a basket, and this could be part of it. Aussie dollar, as far as the day trade today. Euro dollar, same situation. Waiting on the dollar. When the dollar gets to a point that pulls back, this is probably going to pull back up a little bit. Now, that being said, we were just talking about this in the group. This structure doesn't really look very good. That being said, it's low. It's so low. This is nut job right here. You gotta go out to like a daily and weekly chart to see how low this thing actually is on the euro. And I know people are calling for 95, this and that, euro dollar. I don't know. We'll see what happens to the dollar. Again, and a side note here, euro dollar and the dollar index are the strongest inverse correlation that there is in the market because of the weighting of the the weighting of the dollar index. The dollar index is weighted 57% in euros. So, and it's much more than the next highest weighting, which I believe was the yen or the pound. So as goes one, the other goes the opposite. So this has the strongest inverse correlation of anything in the market, euro dollar versus the dollar index. So if we can figure out what the dollar index is going to do, the US dollar, then we have a very, very good idea what euro dollar is going to do. It's going to be near inverse. If you look at the dollar index and the euro dollar, it's near inverse. It's almost perfectly inversely correlated. Even in candles, it looks like you flip the chart. Like Alt-I think on TradingView inverts your chart. It's basically the dollar index. Looks exactly like it because of the weighting, and just explaining the weighting. The dollar index is weighted 57% in euros. So we're going to watch the dollar to figure out what's going on here. Now, that being said, this doesn't look very good. Looks like we kind of might have a shark fin situation going here. This is group stuff that we do, but like high consolidation, second leg of the move to knock out manufactured liquidity below the previous range consolidation. So looks like shark fin. That could be a thing. And whenever you go into a flat consolidation like that, that's generally not a good sign. So we're going to pay attention to that, and understanding that what that would mean is the dollar could potentially break the high, but we're going to wait and see what happens on the dollar tomorrow. before we make that decision. So kind of a funky situation here. We don't necessarily want to do anything on euro dollar right this second. We're right kind of in the middle of a range, and we're close to the middle. We're not necessarily on the high, but we're not on the low either. And we don't really want to, it's a price action hamburger. We want to stay out of the meat. We only enter in the buns. Lol, giggity. We don't diddle in the middle. Lol. So moving on, euro yen. What's going on with the yen here? Second. Yeah, so the yen was coming down. That explains why this was running up a little bit. A range. This has made a significant move here. It would have been nice to hold these trades. God, we had this twice down here. 1,000 pips. 1,000 pips. Banger to break the high. That was it. It broke the high. It would have been time to get out. Once this breaks all this high up here, it's time to close longs. Man, nailed that, dude, a couple times. Had it for 1,000 pips on the first one. 900 something pips on the second one. It's crazy. If we caught, we were scaling into the lows down here and caught it. Wish, if you could go back in time, we don't do hindsight trading here, but man, if you could just go back a little bit and hold that trade, go all in and hold it. Got it. So structurally right here, the range, we're kind of in the middle of it. We want to stay out of it. Not the greatest time to start messing with this, to be honest. As far as the day trade is concerned, we got some small bodied candles, very small bodied, grindy move. This is probably just not it today. Short term, again, we're trying to figure out what are the next two candles going to look like from here. And we've kind of got this situation going on right here. Short term today, it's probably not the best thing to mess with, to be honest. We'll look at it on lower time frames and maybe see where we are within our daily range, but probably not a good idea to mess with euro yen right this second. And we'll try to get an idea on directionally what the euro is going to be doing here. What do we call that, or what? I mean, nothing to say. Called it. Taking a while for this to play out. Came down, took out the longs, and now we're going up, taking out the shorts to fill the gap. You have a gap in volume where there wasn't volume built over time. Like this had a range consolidation that was held. It was held in place, building liquidity above and below, right? It's the money you don't see that you need to pay attention to. Came down, took out the longs, filled, tapped liquidity here, right? Took out the longs, running back up through the consolidation, probably to range like this and fill out this gap. It's just how it works. Sorry. That being said, what's likely to happen here? Short term, it's putting in a range. Again, price action hamburger. We stay out of the middle. We stay out of the meat. We stay out of the meat of the sandwich here. No reason to mess with it. If this were to run up a little bit, probably be looking for a counter trend, like reversal type of thing. We'll look at it on lower time frames. Just again, small bodies, very rangy, but we want to be careful here because we're in the money. We're in the money and we want to be careful. We don't want to be buying into this. We don't want to be buying into an area where smarter traders are selling into. They're trying to sell it to the people who are buying it right here. For every trade there's a buyer and a seller, right? You had plenty of chances to get long, and we've already identified the structural move that's happening here, and we definitely don't want to be buying in the perfect place to take profit on longs. Anybody who's buying up here, you're being used as exit liquidity. You are exit liquidity. Be the shark, not the fish. Be the lion, not the gazelle. Next, euro pound. What do we do here? This looked like a short yesterday. It's finally started to come down. I do think this is going to run down a little bit. That being said, this doesn't look like a cycle high yet. Whenever something comes up and just kind of goes flat and distributes, that may not necessarily be the high. Sometimes it is, depending on, you know, what happens. There'll be a news event or something, but most of the time you'll get some kind of a spike that sells off and then a retest of the high and then the drop. So we'll be careful there. We'll watch the dynamic between the euro and the pound to see which is likely to be stronger, what's gaining as an index. As far as today, what's going on? I mean, the same thing. We had a good run there at the end of last week. Same situation, guys. Starting to see the same pattern develop. We're not really in a good place to take an entry. It's not really the best entry right now. We want to stay out of the middle. We want to stay out of the middle of any consolidation. And the reason why is because you have equal opportunity to get stopped out both ways. There's no outsized risk reward where your reward is greater than your risk, potentially. It's just not there. Hold on 1 second. We'll move on to Euro Aussie. Hold on 1 second. Man, I'm losing my voice already. Sitting here and talk all day. The old coffee real quick. I'll try to run through this quickly so we can find some trades. And still watching on other monitors here. It looks like the Nasdaq's come down pre-market and it's sitting at an interesting level here. So that may be something to look at. Moving on real quick. Euro Aussie. And again, we're trying to get a picture painted about what's going on in general. What direction are we heading? What can we expect for the rest of the week? You know, every week or every day, even, market comes in and dumps a bucket of puzzle pieces out on the table, and it's our job to put that puzzle together as quickly as possible so we can see the big picture, so we can figure out what's going on, so we can see what to do. We got to put that puzzle together to figure it out. And every day it's a new bucket of puzzle pieces. It's just the way it is. While we do analysis, so we can figure out what's going on. We need a directional bias. We need to know how to allocate our capital. Would we want to overweight long euro over the pound? Those kinds of things. You know, if we're looking to take a trade against the Australian dollar, should we trade euro dollar or should we trade pound dollar? You know, one of those things is going to outperform, and that's our job to put that puzzle together. So that's why we do this stuff. Interesting situation here. Potential range high. Be very careful on Euro Aussie. We're starting to see some of that on the euro. That it's probably time for that to pull back a little bit. On the macro, it's kind of in the middle of a big range. And again, we don't really need to get into like macro analysis on something like that to be day traders, but we're kind of in the middle. Realistically, I could see us moving higher, but these are 4-hour candles and we're not like swing trading like monthly charts here. So at the moment, we're retesting a previous consolidation high. That's sketchy. It's also at the top of its range. It's not a good entry long right here. Almost said it's not a good entry short, but it might actually be an interesting entry short. We're at the top of the block, top of this range consolidation. We'll watch this. We'll look for, on lower time frames, Euro Aussie market, we'll watch this for some sign of a reversal, and we'll see where it is within our daily range and all that. But right now, it would not surprise me if we get something like that. Maybe not all at once, but a move back down to the bottom of the range, or maybe even right there. But some red candle would make sense from the top of the range, and we'll see where it is and whether the euro's bullish relative to the Aussie. But that's a lower time frame thing. Right now, it's probably not a good idea to mess with it unless you're going to be starting to scale into a short. We'll come back to that. 1 second. All right, Euro Kiwi. And here's the thing. The Aussie and the Kiwi tend to run together. The New Zealand dollar has been significantly weaker than the Aussie, but running in the same direction, but weaker. This is interesting. We were just looking at this, actually, Euro Kiwi, in the group earlier. We're testing a big macro high here, coming off of a higher low. As this starts to break this high, we'll probably be looking for some type of a pullback. This is pretty ridiculous. We just a parabolic move. We're just looking at this. Look at all these longs down here. We just caught this thing. We just caught it. Like, God, 1,000 pip, another 1,000 pip move. We were right down here on the low, and it's just one of those things where you can't see the future, and you hold it. If you hold it, could have been epic, but you don't really see that, and you don't know that it's going to run straight up without pulling back. And not range or retrace or anything. This thing just parabolic move all the way up. So good game on that. But now that we're on the high, we want to be very careful with that. That should perk your radar up. We're approaching that previous high. That being said, well, we don't have to get into that right now. Watching for the high of the day here. We'll check our range tool and see where our projected high of the day and high of the week is going to be. This is going to be a great short when this comes back down. We'll probably be watching something right there. That little block of price right there is going to be a thing. This is going to be important. This piece right here is going to be important on the way down. Obviously, this consolidation is going to be important. There's just so many targets on the way down. There's so much stuff here on the way down. You're looking at hundreds of pips. It's 360 pips back to a point where that would probably be the appropriate place where it's going to pull back to eventually, and this thing's screaming. So what we don't want to do is be buying this. That's ridiculous. That's just asking to get killed. We don't buy into something like that unless you're trading like a 1 minute chart or something. Hold on a second. Man, voice wrecked. Riggedy wrecked. Hold on a second. It's one thing about doing this. I talk all day, and my voice just never recovers. It's crazy. I'm in a perpetual state of losing my voice. So Euro Kiwi, we're going to be looking for a reversal on this. I like it for a reversal. Pound Kiwi also, we're going to talk about that. Which looks like it's about to start going into profit, by the way, for the group people. We just took it. Euro Kiwi's looking like this is going to be an epic short as far as for the rest of the week. Bet you that this ends up lower than this at some point during this week or next week. So we'll watch that. Pound dollar. Moving on. Moving into the pound. Had some great trades on this. This is very low again. And I'm zooming out to put this into perspective. Why you don't want to short this. Do you really want to short the bottom, guys? Honestly. Just because this is how people get hurt. Listen to the news and, oh my God. Yeah, this is the lowest it's been in 25 years, guys. That's a good thing. That's opportunity. That's opportunity calling is what that is. So big double bottom down here. Interesting situation. We might be starting to step up in the cycle, in the mini cycle. I would watch this for a range. We're going to watch the dollar to see where the dollar rejects the US dollar, because relative to the pound, we need to know what the dollar is doing relative to the British pound. This could be a very interesting trade. If this will pull back a little bit, might get interested in that again too. So not much to say right now. It's bearish, but in a very interesting range here, and it's very low. Man. We're going to watch this. We'll watch this one. What I wouldn't be doing is taking too big of a position size on this right this second. It's bearish, but we don't know how this is going to close. I mean, obviously a bearish candle. I could see this pulling back a little bit. We'll see if it makes a higher low. It's possible that it's just a range and runs all the way back down. It's not the best entry short. If we could get a better entry short, then maybe, but we'll look at this in a little bit. It's not the best place right now. Pound yen killed that yesterday. Got room to go to the upside. We're long on this still. Group, you're seeing some of the group trades here that are still on and still running and working. So pound yen, really good move there. Nice big bullish candle. We'll see what happens. We'll watch this, and assuming this isn't going to come back and break the low, there's no reason to be short on this right this second. We're buying red candles on this. We're looking for the point where this comes back and puts in some kind of a range. It's actually bearish right now. Watch for the people in the group. Target today's center level, right there where the daily open is. You got some confluence there. So interesting on that. Let this pull back a little bit. Might actually try to get long again on this. We'll see if this will pull back, and then the next candle will possibly retest a high like that, and then the next one might pull back a little bit, and then that. So we'll watch and see what's going on here. It's pulling down right now, which is expected. That's why I took profit on mine from yesterday, and I'm going to wait for it to pull back and then double dip that move. No reason to be mega short here, but it looks like this, as far as today, over the next few candles, it would make sense for this to pull back a little bit. So we'll watch that. It makes sense for it to come down. Pound CAD, same situation. Had a really good short on that at the end of last week. Killed that. That was 150 something pips right there. So big bullish candle today. Let it pull back. Watch center mass. Oops. Assuming that it holds center mass, probably get a 1 to 2 candle pullback here, and probably end up going long again on this. And we'll see what the CAD's going to do relative to the pound with the strength tool. But right now, probably not the best thing to mess with. It would make sense that this pulls back a little more, but the pound is very strong. So just before you start selling the pound today, pay attention to what you're selling it against. The strength of the other thing, the other component. There are two components of a pair. Remember that. Relative volatility is the most important concept that probably in trading, period. Pound Swiss, that and range potential. Relative volatility and range potential are the two things we focus on. It's the thing that nobody talks about, and it's the two most important concepts in trading. Funny how that works. You're being led to slaughter. Pound Swiss. Swiss franc is bullish. The pound is also bullish. So this one we probably want to stay out of. I'm not a huge fan of this pair. That being said, got some really interesting price action on this on the macro. It's really time to start paying attention to this for a pull back up. We're just trying to get long from lower and looking to see if maybe we get something like that eventually. Back to retest that range consolidation right there. At some point, this is going to be a great trade. Got all this money up here like this. At some point, this is going to be a massive trade. It just hasn't started yet. So we're going to watch this one. Pound Swiss. We're waiting for the Swiss franc to chill out, man. Swiss franc has been bonkers lately. Kind of a range high at the moment. Obviously not a good long entry from here. If this were to pull back a little bit, maybe try it again, possibly a higher low, maybe. And when we see that higher low confirmed, then we know we'll probably have the low of the cycle. You know, drop, consolidate, drop, consolidate, drop, consolidate, drop, consolidate. It's just continually going to infinity here, but eventually that'll turn around. Tried to catch this a couple times. I actually took a loss on this last week, the biggest loss I've taken in a while, to be honest, on one of my accounts. Not on all of them, but one of the accounts I took a shot at this a couple times and I actually took a loss. I went back a few percent by trying to take a big trade on Pound Swiss because of where it is. It looked good at the time. And I was like, oh man, I took a bigger trade and ended up having to take the stop. So try it again. Not perfect. Don't win every time, but we win a lot. But this one got me last week. Full disclosure, fully admitted. Pound Swiss got me. I think I took like a 2% loss on this. It's the biggest loss I've taken in a long time, but ended up getting some of it back already. So no big deal. It's going to be okay. But careful here, is probably going to pull back. I'm starting to see a general theme here. Pound Aussie. Long on this from yesterday. Looked good yesterday, actually. It was going to run. It pulled back again overnight, but then went. So now we're just on the way back up. This is, again, is just very, very interesting where this is. I don't know what we're looking at there, but it's kind of incomplete. Looks like a bunch of lower time frame analysis on here. Need to clean this chart up. Just, again, watching the points where your shorts were correct in the move and have not been stopped out. That's where the liquidity is going to be on the way up. Very simple, supply and demand. You don't have to make fancy names for it. Yeah, it's like some lower time frame stuff going on here. But we can probably get rid of this. This is how we were figuring out. It looks like we were looking at the mini cycle, and you got some room to go up. We're moving up, looking good. This probably going to go up a little more on that. Not a good entry long. I would leave this alone. It's not a good entry long on this. We're just kind of at the top of this range right now. It would make more sense that there's a red candle coming. So we might have some pullbacks as part in the pound as part of it. I'm seeing this pattern develop where some things look like they're ready to pull back a little bit. Especially pound Aussie, pound Kiwi especially. I've actually taken a small short on this. I'm starting to scale into a short here. Probably got this too right there. That would put it, it's at its high of the day already. And also got some supply up here. Kind of makes sense. Well, I don't like to go back too far in supply because there's a point, and I've made a video about this before, there's a point where if you go back too far, the whole logic of supply and demand breaks down, because that would assume that this money is still there in the same configuration and nobody's taken profit and nobody's moved any money during political events and presidential elections and Brexit and stuff like that. If you're looking at supply and demand on like weekly charts and stuff, technically that doesn't make sense. I made a video about this. If you think about it, it's going to be very clear that it doesn't make sense. That's a whole nother topic though. Really looking for a short here. This is going to be a great trade, guys. Pound Kiwi. When the pound gets weak and the New Zealand dollar lifts off the low right now, the Kiwi is very, very weak, but that won't be like that forever. And this has made a really crazy move to break a swing high into supply. This is one you want to watch here this week. Pound Kiwi to the downside, guys. It's time to start scaling into it. I have a feeling this is going to look significantly different later. Pound Kiwi, mark it on your charts. Make some money this week. CAD Yen. Range high. Killed it. Murdered it. Off the high. Came down 228 pips short. What did I just do? This makes sense that this is just coming off the range high again. Trading doesn't have to be complicated, guys. You don't have to use Ichimoku. You're slowing yourself down if you're doing stuff like that. And if you're saying buys above this level, you're really slowing yourself down. You're doing the opposite of what you should be doing. So, it's a short. Very clearly, the yen looks like it's gaining strength, and that's probably what's going on here. It's a short off the range high. Not a great entry from here. You're fading green candles on this. Not a huge range, but structurally, we haven't cleared through this gap yet, and we're probably looking down into here for targets. So from here, you've still got a very high probability 136 pips ish. There's no reason to go long here, guys, on CAD yen. So we'll watch this as the week goes on. It's a short period. Dollar CAD. watching the dollar here. And again, we talked about the dollar index and what's going on, see how it's retesting the high. We're looking for a stronger dollar here. If you remember a few minutes ago, we're not quite there yet. And let me look at something real quick. Yeah, we still got some room here. Statistically, within our daily candle, we still have room. So we're going to assume that we're going to stay with our bullish bias on the US dollar as of right now. So, we're just looking at dollar CAD. We don't want to short this. However, range expansion. We don't do the trend line thing, but range expansion. We've made a higher high and a lower low. That should immediately catch your attention. That tends to happen at cycle highs and cycle lows, or when something is going to be, extended. It's probably coming back the other way. We're in the middle of it right now. What I generally do is circle your high, circle your low, so you know where your targets are, right? Our effective trading range currently is this. And what we don't want to do is mess with it in the middle, right? What's going on here is this is just a range consolidation that's developing. We're going to assume it's that right now, but it has expanded. So it's possible that it breaks one of these highs, or one of these lows is going to break. Very simply, one of these highs and one of these lows is going to break at some point. The question is which one first. And we're going to watch the two components of the pair, the dollar and the CAD, to try to figure that out. The dollar's bullish right now, fundamentally and technically. Possibly that the rate hike is still being priced in here today. People are trying to buy ahead of the rate hike, so maybe this goes and breaks the high and pulls back. Not a good idea to mess with this right now. But when it gets to the high, or the high of the day or something, maybe we can catch a little retracement short or something. But what we don't want to do is take a large position on this right now from the middle of a range and a range expansion. This is a no. This is no touchy right here. Next, NASDAQ killed it, murdered that yesterday off the low. Caught it, had a really good trade on this actually. It closed it this morning. Actually closed one of them last night, and then the other I just went ahead and dumped it this morning. Had this on 3 accounts. One closed as a basket yesterday. One I closed overnight. That was the only trade I had on that account. I had 2 positions in the same place, basically, on the NASDAQ, and I was going to close one and then close the other higher. I just went ahead and closed them both, took the profit, and I closed another one this morning as part of a basket of other trades. Pound yen, pound dollar, pound Aussie, long from yesterday. Gold, long, had a great trade on gold yesterday. We're going to get to that. Right now, this is pulling back down here. This is the elephant in the room, the elephant on the chart. Is this lower level down here, demand level. This is the point where your longs were correct in the move and have not been stopped out yet. Cheat codes, as far as structure is concerned, not really day trading, but structure, look for the point where your traders have not been stopped out yet, because that's where the money is. That's where the liquidity is to exit positions. The money that's still there, because they haven't been stopped out yet. Who has been correct in the move and not stopped out? That is a question to ask yourself. NASDAQ coming down, obviously, but we'll look at this on lower time frames. I wouldn't be surprised if we get some kind of a range here like this that ends up holding and then running back up a little bit, but then ends up dying later at some point. That's kind of what we're going to look for here. That is a potential. That is a potential move. This is just staring us in the face down here, and it never got retested. And that is sketchy. That's sus right there. That's awfully suspect. Just sitting there staring at us and hasn't been touched yet. So we have to be aware that that's possible. It's possible that it just runs right down to it now. But if it gets down there, it's a long for the win. For the retest of the high, probably make a lower high. But either way, when it gets down there, we're going to be scaling into longs. And it's kind of just not really a good idea to mess with it right this second. We're kind of in the middle of our effective trading range, highs and lows. If we think of it just very simply that way, we're kind of in the middle. You have equal opportunity to get stopped out both ways. Not really a good idea. Next, S&P, you're going to get identical structure. Dow, you're going to get identical structure. No reason to mess with that. The VIX, it's more just reference. We don't trade it. It's not really necessary. It's interesting to look at when it gets very low or very high. It's interesting. When it gets very high and goes to come down, you're probably going to go into a consolidation. But when it gets very low, you're looking for volatility one way or the other. It's not a directional indicator. It doesn't mean that this is the S&P volatility index. Doesn't mean it's going to go up or down. It just means that there's volatility likely. And it generally gets low when there's a consolidation. And it generally goes into a consolidation when it gets high. We don't have to go through that right now. It's just kind of screwing around here. No reason to even mess with it. We don't really talk about it much. Every once in a while, we'll reference it just to see what's going on. Oil down. It's also potentially this that hasn't developed yet. And we've been watching this for a very long time. Just loosely referenced, some type of a range low. We don't want to assume that this is going to die from here. This is just buried in small bodied candles. I bet if you look at this on like a daily or a weekly chart, it'll make more sense. We've caught this a couple times. Reversal off the low, short off the high, reversal off the low, short off the high. And we've been working this back and forth. Right now, it's not a good spot. This is some weird price action. Should have taken it long down here yesterday. We just talked about that. We had the analysis on it yesterday morning, and I just didn't click the button. So I can't take a victory lap on it of calling it because I didn't actually take it. But boy, we had this like almost to the pip yesterday morning. I was like, oh man, we should be going long oil. And I just didn't do it. I was like, whatever, I'll look at it in a minute. And it went from where we were talking about. So it just came off of an equal low here. And effectively, this is what we've got right now on it. We're close to the middle of the range. Not really a good option for an entry, really. Not the greatest entry. Pretty messy here. It's probably time to leave this alone. We want to be long from lower or short from higher, if that makes sense. But on the macro, probably don't want to be heavily shorting this down on the bottom. There's a very good possibility that this does something like this over the next little bit. So be ready for a lag in refinement and higher gas prices. There's going to be an excuse to raise the prices of gas again, which is another interesting thing. The Inflation Reduction Act is getting a lot of scrutiny right now because of all the tax hikes that are in it. So that's a thing. And part of that is massive tax hikes, I believe by the hundreds of billions on oil and natural gas companies. So that's going to be interesting what happens there. Inflation Reduction Act is about to make your gas bill go higher, your electric bill go higher, your pharmaceuticals go higher, your rent go higher. It's just going to get passed right on to the consumer. So interesting. It's not a political statement. It's just we're financial analysts here. So it is what it is. No matter what you believe politically, I think it's going to have the opposite intended effect, to be honest. It's nothing to do with politics. It's just what it is. When you cost companies more money, for number one, they're the ones that provide all the jobs. So careful how much you complain, especially with robotics and artificial intelligence the way it is. If you want a job, be careful how much you complain about your employer. The people, the business owners who give you your jobs. I don't mean you personally, but as a whole, as a people, as a country, or a class, a working class. Be careful how much you complain to the person who is employing you, because artificial intelligence and robotics are here and it's ready. Careful with that. And on top of that, when you raise taxes too much on corporations and things like that, they just pass it right on to the consumer, and your Inflation Reduction Act is going to have the opposite intended purpose. So careful with that stuff. Go to vote. Not political, but it's about common sense. Gold. Again, you got the people who know me know we don't really do politics here. We're an equal opportunity ridiculist here. we make fun of whoever's in office, equal opportunity for the bonehead moves that they pull, and we give praise where praise is due. Political circus. We're a banana republic right now. It's a whole nother conversation. Gold had some great trades on this week. I really kind of wish I would have held this. You know what I wish I would have held was the NASDAQ. I had the bottom down here with a heavy position, heavy for the account size. I had I think more than one full contract on the NASDAQ, and for the account size, it was like epic. So, man, I wish I would have held that. It ended up running up. I just got scared. I got myself into a quagmire on Friday last week with NASDAQ, but ended up getting out of it. And gold. I was going long gold and NASDAQ, and it wasn't going up. I was like, oh my God. And then eventually it pumped. So got it right, but it was sketchy. Now I wish, in hindsight again, I wish I would have held it. But isn't that story of our lives as traders? Gold looking good. Higher low here. It is kind of selling off a little bit today, but at the same time, we're not getting a heavy downside. It's a little early for that to be moving heavy volume anyway. We'll see what happens here. It's coming down. It doesn't look that great on higher time frames. That being said, it's low. It's broken a major low, and we've talked about the fundamentals here. The game theory of the Russian central bank pegging its currency, pegging the ruble to gold, and the dynamic of that, and the dynamic shift in gold, and forcing Europe to purchase gold to buy oil and natural gas going into the cold season, into the winter. They have a gun to the head of Europe right now. Europe doesn't really have a choice as far as where they get their natural gas and oil from in a lot of places. And what Russia did was like a 1,000 IQ chess move. Again, politically, whatever you believe doesn't matter. We're talking about the analysis of what happened. Taking politics and, nationalism out of it. Putin basically put a fundamental floor on gold in a way, and pegged his own currency to the price of gold at a fixed unit cost. So what happens there is and at the same time, and this is the point, at the same time simultaneously said that Europe has to pay for its gold and natural gas in gold or rubles. So he's holding his own currency up during the wartime. Is a very smart thing to do on their part. So in a way, there's a fundamental floor on gold, because Europe doesn't have a choice but to buy gold to pay for its natural gas and oil going into the winter, when the people are going to be cold, and you know what I mean, in the winter. And now there's a reason why Europe is forced to buy gold. They have to. And it's, look at the technical floor that we're at, the bottom of a massive macro range. Do you really want to be selling gold right now? Probably not a great idea. And I think time will tell. We've been talking about this for a while. I think time will tell whether we're right or not. But as far as technically right now, we've broken a low. So we want to be careful trying to sell anything on a broken macro low at the bottom of a big macro range when there's a fundamental floor on it. Be careful with this. And I know it's a little more nuanced than that, but the common sense of it and the logic of it, just be careful. You don't want to be heavily shorting gold from the bottom going into the winter when Europe is forced to buy natural gas and oil in gold from the only source that they can get it from. Careful with that. Just game theory stuff. Nobody's talking about that kind of thing. It's weird. I don't know. Odd. Right now, technically, let this candle close. I bet you would pull back up a little bit. This thing is very low, and I think a lot of people are interested in buying gold. It's probably not the best thing to mess with right this second. Like, it's pulling back up. I'm assuming this is going to be kind of rangy here, and we'll see what happens with the dollar. Let the dollar get to its high, and we'll take another look at gold as far as where it is. Today is probably not the best thing to trade. So, cliff notes, like, what was the takeaway? what's the prognosis here for the week? Just quickly running through. Bitcoin's probably not a good time to mess with it. If it would go lower, I would be interested in it, maybe on a broken low for like a little swing trade or something. On the macro, this is not great, honestly. This kind of thing just looks like it's going to roll over and go break the low again. It just doesn't look good. And I know people don't want to see that number right there, but that's probably what it's going to be. So just be aware of that. I know people heads spin when I start talking stuff like this, and I'm right every time. And it's like, you know what I mean? The people that have been around long enough, especially with Bitcoin, I'm the only one that's shouting from the rooftops, please don't buy it. Please don't buy it. It's 65,000 and say, oh, well, Mr. Wonderful said it's going to $1 million. Oh, Anthony Pompolano said it's going to $1 million. Yeah, that's because they have Bitcoin funds. They make money. They need exits. They tell you that it's $60,000. They'll pay Matt Damon to get on the Super Bowl commercial and say fortune favors the brave when the price is this. And then it does the opposite and everybody can't figure it out. Think crypto's a scam. It's not a scam. You just bought the top. Don't buy the top and don't sell the bottom. Pretty simple. Anyway, what is going on with this? Got wrecked. Hold on a second. Oh, my mouse stopped working. Anyway, Cliff Notes. Probably not a good idea to mess with Bitcoin right this second. It's probably going to go lower. Very likely. It's not a good entry though. The sell was last week on this when we talked about this. If anybody saw the analysis video from last week, right here, about 3 or 4 candles before this happened, is when we said, get out. Dollar, wait for this to get to the range high up here. I'm assuming that the bias you would have is that this is going to continue to run at least a little bit higher. We do have a rate hike coming tomorrow, so be careful with that. We'll watch the dollar. There's going to be some good trades coming this week on the US dollar against the dollar. Very likely. So we'll check that out again, Aussie dollar or whatever. The euro in general, a lot of these euro pairs and pound pairs actually look like they're going to be reversals coming to the downside. They both look like they're going to be coming down, which is interesting. The pound and the euro are kind of running together. Short term, they're running together too. That's kind of a pain in the butt because it kind of cuts out your options. When two base currencies, really the euro and the pound, most of your trades are going to be either euro based or pound based a lot of times, and the dollar, but you know what I mean, like euro something and then pound something. When they're both running the same direction, that really cuts down your options, because if there's no trade on euro yen, then that means there's probably no trade on pound yen either, because the euro and the pound as a base currency are running together in the same direction at the same rate. That can be an issue, and you can get these choppy markets, and that's kind of what we have right now. It's looking like we're going to get some reversals on some of the stuff. Euro Kiwi. Yeah, don't miss this trade, guys. We talked about that. Pound Kiwi, same thing. Very interesting stuff here this week. We're at a very interesting spot. We're going to be scaling into this as it runs up. And it's possible it runs a little more. It's unlikely that it's going to have a big move from here. And it's the from here relative to our current place in the universe. From here, it's not likely that it's going to make a massive move up after breaking a swing high, stopping out shorts in supply after whatever this was, hundreds of pips to the upside. This is going to be interesting. It's likely that it's going to distribute a little bit and then pull back some. So there'll be some trades here coming, I'm sure. So that's a thing. As far as the stock market goes, it's in a weird spot. There is a level lower. That being said, it's not really bearish right this second. So we'll have to pay attention to that as it develops. Again, we're long NASDAQ already from yesterday and Friday. We're long NASDAQ looking higher, but we're going to be positioning as it pulls back. So as far as that, oil, again, it's in a weird spot, but it's very low. Gold, it's at a weird spot, but it's very low. We're looking to buy lower lows every single time until it goes to the moon. We just talked about the game theory play of gold and what's going on. We have a lower low here. Just be careful. It's trying to sell this thing. Might get your face ripped off. Just careful. I don't know. That's about it right now. We're going to find some day trades here. Switch over, do some group stuff. I think that pretty much covers it right now. I mean, there's not really a lot going on today. We're waiting for Powell. If you're watching this in the future, FOMC is today at like 2 p.m. It's 6:30 a.m. right now, Wall Street time. We have all day to go until Powell comes on and dumps the 75 basis point rate hike on us. And then we'll see what he has to say about it. Markets tend to be quiet until then. Everybody kind of sits on their hands and doesn't move money until they hear what Powell's going to say. Any kind of projections, it's pretty much priced in. I mean, everybody knew this was coming, but some people still trade the red and green lights on Forex Factory. So I don't know what's going to happen there. We're going to watch for the dollar to reach a high. I think the thing today and going as far as even the rest of the week is, what is the US dollar going to do? And we'll obviously be watching US equities and gold and any dollar-based pairs there. Again, some of the Kiwi stuff, Aussie and Kiwi stuff is pretty high. So there may be some reversals there. Well, we'll stick with it. We'll figure out what's going on anyway. I hope everybody has a good week here. Not really much to say at the moment. We're just going to watch stuff and react to it when it happens. Anyway, have a good day.